Okay, good morning. Today we are going to finish Chapter 1. Whatever homework, we might have one or two homework problems we don't do in class. I will email out link to short videos I've done on how to do the homework that we don't do in class. So if you need help, you'll have that. So Learning Catalytics, you should be logged in. The session ID is on the screen. So you go to learningcatalytics.com. If you have a laptop, you can go in through My Accounting Lab. If you have any other mobile device, you're better off going in through learningcatalytics.com. I think we should be fine. Okay, let's do this Saturday. This Saturday, this is a regular week. You'll have homework due. Chapter 1 homework is in My Accounting Lab. When you do the homework, you go into My Accounting Lab, you go into Do Homework, and then work on the homework that way. Remember that when you finish an exercise, each individual exercise, if you don't get 100%, there'll be a similar exercise button at the bottom. You can click it and try again. So the Chapter 1 homework is due Saturday, January 30th. Also not on the slide, you should have received a little reminder or a little query from me to make sure you check your score in My Accounting Lab. You do need Learning Catalytics and My Accounting Lab both active to get credit for class, because if you only have Learning Catalytics, I have nowhere to put the grade and it doesn't go anywhere and it just gets lost. So you want to make sure you go into My Accounting Lab when you get a chance, go into Course Home, into Results, and then you'll see a list of all your scores to date for this class. If you've done everything to date, you'll have a course intro quiz score, which was done in My Accounting Lab last week, and you will have a score that says class on January 25th, and there were 7 questions on Monday. So those are the 2 scores you have in there. You might have started the homework, and you'll see homework, whatever score you have at this point on the homework. At any given time, if you're in My Accounting Lab Course Home, click on Results, and then you're in this list of all your scores to date. If you click on Overall Score, that'll show you your overall score in the class to date. So every day of the whole semester, you know where you stand. That is weighted appropriately. Of course, right now, you don't have any exams in there, but it's weighted with what we've done to date. Let's see. Okay, so we have a question on Learning Catalytics, and a lot of you have answered it. Make sure you're logging into Learning Catalytics. And so it says this deals with the accounting equation, which we did on Monday. Absolutely positively need to memorize the accounting equation. Accounting equation, assets equal liabilities plus equity. That is just one of those fundamental things you have to know. So this accounting equation, remember, just a word that the question numbers I use have no meaning to you. They have meaning to me, but not to you. And so those question numbers, the fact it's question 22 doesn't mean anything. So if equity is $600 and liability is $500, what are assets? Well, our accounting equation is assets equal liabilities plus equity. So this one should be pretty straightforward. Okay, so I'm looking right now, and we've got a few people with the wrong answer. Now, remember, assets equal liabilities plus equity. I'm giving you equity of 600 and liabilities of 500. So we plug some numbers in there. You have assets equal 500 plus 600. So what you end up doing here, you want to make sure you've got your answer entered. Make sure you don't put a comma in your answer or a dollar sign. I'm going to close this question in about 30 seconds or so. So make sure you've entered your answer. You may want to make sure someone just entered an extra 0 in it. So you may just want to show your answer and make sure you've got the right answer. So I'm going to close that in a few minutes, a minute or so. I'm not going to announce when I'm going to close it, but I'll leave it open. So if you're just getting logged in, you'll have a minute or so to do that. So anyways, accounting equation, you have to be able, if I give you any 2 numbers of those 3, you need to be able to solve for the other one. Okay, so check your score in My Accounting Lab, Learning Catalytics score. Go to Course Home, click on Results, see the score next to class on January 25th. There'll be a score for today in there. You'll want to check that one too. The first couple days it's good to check just to reassure yourself. But the one from today, I'm guessing, because I have meetings as soon as office hours are over, so I'm guessing it'll be late today or early tomorrow morning. I'll probably send out a text message reminder just to ask you to check it, and that's all I'm saying, because it helps you and it helps me if you check, because we want to get any issues resolved right up front, and then the rest of the semester is painless. Okay. So, and your grade is 50% participation, 50% accuracy. Hopefully by now you see that accuracy probably isn't going to be an issue. As long as you're paying attention, taking notes, you should be fine. As long as you're on time, logged in, life is good. Okay? Okay, so financial statements. We talked about some fundamental concepts on Monday, and we're going to go through the financial statements today. We have a little bit more to say about the accounting equations. So we said that the accounting equations is assets equal liabilities plus equity. We can rearrange that a couple different ways. In this case, we can take assets minus liabilities equals owner's equity. That's kind of like my example where we started, where I had a house and these assets and I had liabilities, and I could subtract that to get my own personal net worth. Well, we can do it in business, and we can come up with equity. And owner's equity can be owner's equity, it can be stockholders' equity, it can be shareholders' equity. Once in a while it's referred to as capital, not as often, but it can be. So know that when we talk about owner's equity, stockholders' equity, they all mean the same thing. By the way, owner's equity means it's a sole proprietorship. That's where that's coming from. Stockholders' equity, shareholders' equity means it's a corporation. Okay, so we can write the accounting equation, assets equal liabilities plus stockholders' equity or equity. They're all going to be interchangeable. And then stockholders' equity is actually two components of stockholders' equity. There's paid-in capital and there's retained earnings. So we can expand that accounting equation as we go, but we have assets equal liabilities plus equity fundamentally. But we can rearrange that. No, we might rearrange it as we go forward. Okay, now when we have owner's equity is impacted by two things, well, multiple things. Owner's equity, when we look back here, we have paid-in capital. Paid-in capital is when people buy our stock, basically. Okay, so we offer stock, we offer ownership, people give us money, we keep their money, that's paid-in capital. This other component, retained earnings, is a running total of all our earnings to date. So retained earnings, revenues will increase retained earnings, expenses will decrease it, and dividends will decrease it. So we're going to see that as we go forward. We're going to see retained earnings in quite a bit more detail at a later time. Okay, so next up, we're going to do another accounting equation question. Okay, so liabilities are $500, assets are $1,200. What is equity? Again, no dollar sign, no comma. And you'll put your answer in. Okay, once again, there's that accounting equation. So you need to plug the numbers in. Okay, remember when I put these up, the numbers can be in different order. It's not necessarily the same question as we just had. So the question we just had, we added the two numbers together because we were given liabilities and equity. In this one, it tells us liabilities are $500 and assets are $1,200. So now what we've got is we've got assets are $1,200, liabilities are $500. So what does equity have to be? Okay, so you're not adding the two together. But what you're going to have to do on this one is you're going to have to subtract. You'll take the subtract the 500 from both sides. So you end up with stockholders' equity essentially being 700. So again, you should be able to do that. When I give you any of those questions, any of the two factors, you should be able to solve for the third. Okay, I'm going to close that question in about 10 seconds. And then we're going to move on to where we start talking about the actual financial statements. Okay. So, and if you have the PowerPoint slides printed out, there's a lot of good stuff on those PowerPoint slides. I'm not showing every slide. There are no slides I would delete from those slides you would have downloaded. They're great review material, give you some of the high points. Exhibit 1-6 in your text, it gives you basically each financial statement answers a question. So the first question is, how well did the company perform during the year? That's going to be the income statement. The income statement answers, how well did we do during the year? What's our income? Okay? And then how we get the income is basically we take revenues minus expenses will give us net income or net loss. So that's the basic format for we're going to see for income statement. This exhibit 1-6 or this PowerPoint slide, this is a great summary to be able to know this bird's eye view of what we're doing. The question, why did the company's retained earnings change during the year? That would be the statement of retained earnings. And that's going to start with beginning retained earnings, add our net income or subtract net loss, subtract dividends declared, and gives us ending retained earnings. Again, this is a really good bird's eye view or summary of each of the four statements. We have four main statements we'll be talking about. And this is Exhibit 1-6 in the text. You can also grab the PowerPoints and you'll see this slide if you don't get everything. Okay, what's the company's financial position? How is it situated at year end? That's going to be the balance sheet. The basic balance sheet, that's the accounting equation. Assets equal liabilities plus equity. That is the format of the balance sheet. Okay, and then finally, how much cash did the company generate during the year and where did it come from? That would be the statement of cash flows. And that one, we have operating cash flows, we have investing cash flows, and we have financing cash flows, and that comes up with our increase or decrease in cash. So what we're going to do today is we're going to do basic financial statements, the first three. We're going to do income statement, we're going to do statement of retained earnings, we're going to do balance sheet. We will not do the statement of cash flows until the last couple weeks of the semester. It's a little bit more complicated statement than the other ones. It's one of the most important ones, but we'll save that for later. So today we're going to do an income statement, statement of retained earnings, and a balance sheet. We're going to get through those, and those are the ones that we're going to keep coming back to, like I said, until towards the end of the semester. And today the statements we do are very, very basic. As we go through the semester, the statements will get a little more complex as we'll build on them. By the way, these statements feed each other. The income statement, you prepare it first, and the net income goes down to the statement of retained earnings. And then the statement of retained earnings comes up with ending retained earnings, which goes into owner's equity on the balance sheet. And then the statement of cash flows deals with change in cash, which will be on the ending cash will be on the statement of cash flows. So they all feed each other. They have to be prepared in that order because your income statement does your income goes to the statement of retained earnings, which your ending retained earnings ends up on your balance sheet, and then your ending cash ends up on your statement of cash flows. So that's the order they go in as well. But this is a really good summary because it's going to give you a bird's eye view of the basic format of each of those statements. Okay. So now what we're going to do is we're going to go through the income statement, we're going to go through a statement of retained earnings, and we're going to go through a balance sheet. So we're going to flow all those through. Okay, so we're starting with the income statement. So the income statement answers this question of how do we do during the year. It reports the revenues and expenses of the year, and it will give us our net income or net loss. Now, I always assume you have the PowerPoints available to you. Now the thing that's not in the PowerPoints are the homework problems. We've got copyright issues with the screenshots, and then I also change things time to time, so I want maximum flexibility. So yesterday, as I'm getting ready for class today, I thought this is a lot of writing. So I know a lot of you got this. I sent it out a couple different ways. There is a PDF. So what I did, we're doing 3 statements today. We're doing the income statement, we're doing a statement of retained earnings, and we're doing a balance sheet. Actually, our 3 are not connected to each other. They're each standalone. But I thought to myself, this is a lot of writing. So that's why I sent out this PDF ahead of time. So you could do what you wanted. If you wanted to print it out, you could. If you wanted electronic, you could. But this handout, the tiny.cc/Jan27 statement, it's a PDF, and it contains the quote-unquote answers for the 3 statements we're doing today. So my thinking was we could walk through the statements and you could spend your time writing notes about the statement rather than trying to write the statement down. But that's up to you. So that it's just a 1-page PDF of the 3 financial statements. Those 3 financial statements are not in the PowerPoint, so that's why I sent it out separately. And I posted on Blackboard. I also sent the URL out through that remind.com. So I'm just assuming you have this. And so the first thing we're going to do is we're going to do short exercise 1-10, which is actually the first statement on that PDF handout. So, but I'm going to go through it, but that is just the first statement. That handout doesn't have, it isn't labeled as to what it is. I just have 3 boxes, but we're in the first box. So we're given a problem here, and so this is our first real homework problem with numbers and things. This one says the company began the year with total assets of $216 million and ended the year with assets of $358 million. So I'm going to stop right here. Notice how it doesn't say 6 zeros after that number. That number, $216 million, when we enter it in my accounting lab, it's going to be 200. It's going to be 216. If the number is not given with 6 zeros, don't add it. Okay? Because if you add it, then you're talking about what a quadrillion or whatever number 6 zeros onto millions are. So you're really wrong if you add 6 zeros onto it. If you ever have a question in my accounting lab about what should this look like, do I need to put all these zeros in? The easiest way to solve that question is to click on the Help Me Solve This and have that pop up and kind of see how the answers are there, because they're going to be very similar on yours. So, but yeah, so the facts. So there's our first thing. When it says million, don't think, oh, I've got to add 6 zeros to it. Don't. I think you keep it in the format in which it has. During the year, the company earned revenues of $398 million and had expenses of $167 million. It paid dividends of $25 million. So we're supposed to prepare the income statement. Okay, so what we're going to do here is we're going to walk through the income statement very slowly, because there's a lot of things we need to know about an income statement. Okay, so an income statement answers the question about how did we do. And the basic format for an income statement is revenues minus expenses equals net income. Over time we'll add in things like gains and losses, but it's the same basic format. So first thing we're going to do, the income statement appropriate heading. Every financial statement, we've got 4 financial statements, every one of them has a heading. And when you pick up any company's financial statements, it will follow the same process, the same format. The very first line of an income statement, of any statement, is the name of the company, the formal name of the company. That will be true on every real-life company that has prepared statements in accordance with GAAP. It will happen when we do these 4 statements here. So this is O'Malley Services Incorporated. That's because as an investor, you pick up a statement, you want to know what company does this statement belong with and what does it cover. If you pick up Amazon's balance sheet or income statement, it will say Amazon and Consolidated Subsidiary. So it's telling you it's Amazon and everything they own, including Zappos and whatever else they own, Amazon Web Services and everything. So the very first line of an income statement is the company's name. It has to be in that order. Okay? So that's number 1. So that will apply. When you do the homework, first line you'll do a drop-down box. First line has to be the company name. Can't be in random order. It's always the company name. The second line is always the name of the company. It's always going to be the name of the company, or not, I'm sorry, the name of the statement. The second line is the name of the statement. So we have the name of the company first, then the second line is the name of the statement, so we have the income statement. The income statement, by the way, can also be known as a statement of operations. So once in a while if you pick up, well, a lot of times if you look at someone's, a company's formal statements, it'll say statements of operation. But you know it's your income statement because it has revenues first, and then it has expenses, and it has net income on there somewhere. Okay, and then the third line. The third line is the date line. Now, the date line is going to vary depending on what statement it is, and you absolutely need to get it right. If it's an income statement, it'll be for the period ending and give you a date. So this one, year ended December 31st, 2014. That is not equivalent to putting December 31st, 2014. If you put December 31st, 2014, you don't know, is this an income statement for a year? Is it for a month? Is it for a week? Those questions are really critical when you're looking at an income statement. So an income statement has to tell you income for how long. And typically you're going to see for year ended, you're going to see for month ended, for quarter ended, but it'll give you the period of time and that cutoff date. Okay? So that's the income statement on the heading. And the homework, when you do the homework, you have to get the heading right. Okay? It has to be in that order, and this is one of those fundamental things. And when you start looking at financial statements, you'll notice every financial statement has these headings in this order. Okay, so now what we're going to do, let me see. Okay, yeah. Okay, so next up we're going to do our start into our income statement. So next up I'm going to put revenues. And again, this is the most basic income statement we could do. They get a lot more interesting later, but we're just going to go with the basic income statement format is revenues minus expenses. So we're going to put revenues, and then we're going to put expenses, and we're going to end up with net income. Okay? So we're just kind of laying out our headings on the left-hand side. Okay, now we're going to put revenues that came from the problem. The problem told us revenues were $398 million. Okay. Notice that millions is in there somewhere. Well, typically if it is in millions on a statement, it'll say somewhere near the top of the heading, somewhere in the statement near the top, all amounts are in millions, all amounts are in thousands, or however, whatever they're using. So notice we're not putting those 6 zeros in. If you put 6 zeros in, you're really super wrong. Okay? A year ago, I had a student email me, and they had put 6 zeros in and told me they should get credit because they obviously had the right answer. They were really close. And I'm like, that's not really close. 6 extra zeros is not close. But keep in mind, if you do this wrong, it's not the end of the world. When you get done with the homework problem, you can do it again. So again, if you do mess up something like that, you see what you did, click on similar exercise, you can try it again. Okay, so revenues. We put down revenues. Next up, we put expenses. Again, I'm taking these numbers from the problem. It gave me revenues, it gave me expenses. Now, at the end of a set of numbers that I'm going to add or subtract, I put a single underline. So that single underline tells me I'm doing some addition or subtraction here of things above that line. And then I'm going to subtract and get 231. Now, I've got lots of things, notes to make here for you. Okay? Couple things. I take 398, subtract 167. Notice we do not put bracket, we do not put parentheses around the 167. We don't put a minus sign in there. That's because as knowledgeable users, everyone that sees an income statement knows that expenses are subtracted. Okay? It is possible to have negative expenses. So if you see a negative there, that means you're going to add it. You're going to subtract a negative, which adds it. So you do not put negative, you do not put negative sign or parentheses around it or negative signs around expenses. Expenses are always subtracted from revenues. Okay? Now, we have a single underline under, we have revenues minus expenses, and you see that single underline, it's almost like an equal sign, almost. And then we put the net income that we got, and then there's a double underline under that. And that double underline says we're done with this column. Okay? And so that double underline. Now this single underline and the double underline are pretty big deals in my accounting lab, and let me tell you what. On this particular exercise, and other exercises as well, you'll be given this blank sheet, and then you've got drop-down menus. So you do the headings, and then you do the revenues minus the expenses, do that. But your sheet that you're given is longer than the number. So they don't give you just 3 lines. They don't give you just revenues, expenses, and income. They give you several lines. The thing you need to watch on this one is you need to put in your revenues on the first line. You do your headings, and then you do your revenues, expenses, and then look for where the double underline is and the single underline. If I recall right on this one, there's a couple blank rows. Look for the single underline and the double underline. That is the row that net income goes on, because my accounting lab is letting you show that you know how to do that. There's another number in this problem. The reason they give you extra space is like a distractor, because there's another number in this problem. It says O'Malley Services paid dividends of $25 million. Notice that's not on here. That's a distractor. You do not ever put dividends on the income statement. But my accounting lab will let you do that. You want to prove that you know how to do this. But there's extra lines there. There may be extra lines on other exercises as well. So when you see the single underline and the double underline, that tells you that's the bottom line. That's where the bottom line goes. So you might have a couple blank spaces in between. You have revenues, expenses, a couple blank lines, and then look for that line with the single underline on top, the double underline. That's it. That's where your net income goes. That's where you say, I'm done with this statement. And that's also one of the formatting options in Excel. So when you see Excel, the single underline, the double underline, that says I'm done with this column of numbers. I'm done with my totals. Now, in my accounting lab, I'm going to talk about a couple things that don't matter in my accounting lab, but in real life. Typically, in real life, the rule about dollar signs is we will use a dollar sign in the first number in a column. We will use a dollar sign whenever we have a subtotal or a total. So in this case, we have revenues because it's the first number. We don't put a dollar sign on expenses because it just follows, but then we do put a dollar sign on net income because it's a total. Okay? Now that rule, it gets kind of iffy if you have lots of different subtotals. It may or may not be consistent, but something that's pretty consistent is the first number always has a dollar sign, the total has a dollar sign, and then subtotals are kind of depends on convention for that particular use. My accounting lab doesn't care if you put dollar signs in or not. That's not something you're going to be tested on. I'm not going to ask you where a dollar sign goes, but I just wanted to explain why, say for example on this one I've used 2 dollar signs and not 3, because we don't put dollar signs in front of every number. We typically, you do the top number, bottom number, and then subheadings in between. And when you look at a company's real financial statements, you'll see they follow that convention as well. But my accounting lab you can put dollar signs in if you want or not, it doesn't matter. Same with commas. You can put commas in my accounting lab or not. It's not going to care if you do. On the other hand, Learning Catalytics doesn't like dollar signs or commas. So I'll remind you if we have other ones like that. Okay, so questions about the income statement? Okay, so far so good, right? So this is not a bad one. The only thing is when you do that homework problem, just watch for the couple extra blank spaces and look. You will see then down in the bottom, you will see the single underline and the double underline and go, that's where I need to put my net income. Okay, so that is the first statement. That's the income statement. And so that's a bird's eye view of the income statement. Like we said, they will get more interesting as we go. This one's just revenues minus expenses. Also notice dividends are not an income statement item. Dividends are a return of equity, so they belong with stockholders' equity. And we'll see that coming up. Okay, so let's do, okay. Let me tell you one more thing. Here's one more note, okay? You see on our income statement, we've done revenues minus expenses equals income. Something you need to write down, okay? Income statements also have gains and losses on them, okay? So income statements are primarily going to have 4 items on there: revenues, expenses, gains, and losses. Okay? And we're not putting gains or losses on right now because it just complicates it. So we'll worry about that at a later date. But income statements, revenues, expenses, gains, and losses, basically what show up on an income statement. Okay, so income statement only. Income statement. Revenues, expenses, gains, losses. Everyone has that, right? So you probably suspected this was coming. But, so this question, this is one of those ones where you have to pick all that apply. So what's going to be on your income statement? Pick out all the items there that would be on the income statement. Okay, so you just write it down: revenues, expenses, gains and losses. I'm going to close this question in about 10 seconds. If you're waiting for me to put the answer up on this one, I'm not going to, so I am closing in about 5 seconds. As I did say, it's revenues, expenses, gains, and losses. Okay. So revenues, losses, expenses, gains. Okay. Assets, liabilities, and stockholders' equity are all on the balance sheet. Okay. So we'll see that coming up. But it's your income statements will be your revenues, expenses, gains, and losses. Okay, so here's another one. Okay, I have not put it out in Learning Catalytics. I want to talk about it first. Okay, so you will be prepared to answer this as soon as I'm done talking. Let's assume that beginning retained earnings is $100. Revenues for the year total $75, while expenses total $50. The company paid out dividends during the year totaling $10. What is net income? Okay, so the income statement that we just did, okay, that income statement we just did, we saw we had revenues minus expenses, right? Okay, so income is, when we go to calculate net income, we don't have any gains or losses here, okay? Net income fundamentally is revenues minus expenses. So write that down. Revenues minus expenses is net income. And you've got it in the income statement if you have the handout. Revenues minus expenses is net income. Now, this problem, there's lots of other numbers. That's fine. That's just like real life. Part of real life is sorting through what's important and what's not important. So in this case, we've got revenues minus expenses. We don't, on an income statement, we don't have retained earnings on an income statement. We don't have dividends on an income statement. So an income statement, basic format, revenues minus expenses. Okay, so on here, you now have the question. Again, you don't want to put any dollar signs in your answer. And I am going to be closing the question in about 10 seconds. Again, revenues minus expenses. Okay. Okay. So net income, revenues minus expenses. So we're going to have 75 minus 50. 75 minus 50, $25. So our net income is 25. Okay, so now we're done with the income statement for the moment. By the way, when we have revenues minus expenses like we see there, revenues can also be called sales revenues or sales. So you've got those interchangeable sales revenues, revenues, or sales all mean the same thing. So you might see different variations of that depending on the company. Okay, so we are leaving income statement now. We are going on to the statement of retained earnings. Okay, statement of retained earnings. Now, the statement of retained earnings is basically saying retained earnings is this cumulative total of all our earnings to date. So we start with the beginning retained earnings balance. We add net income or subtract net loss. That net income comes from the income statement, and then we subtract dividends declared, and it ends up with our ending retained earnings. Okay, so we have beginning retained earnings, add net income, subtract dividends declared, and give our ending retained earnings. Okay, and then we're going to do a statement of retained earnings. Now, a statement of retained earnings, we start with the old retained earnings, add net income, subtract net loss if we have a net loss instead. We subtract dividends declared, and we come up with our ending retained earnings. In real life, this statement is going to be the statement of stockholders' equity, and it's probably going to have 10 or 20 columns, and it's going to be a lot more complicated. So this one is greatly simplified for our class. In one of the last chapters, we'll see a statement of stockholders' equity, but this one we're focusing on just one element of stockholders' equity, and that's why we have a statement of retained earnings. So if you pick up like an Amazon financial statements, you will not see the statement of retained earnings. You'll see the statement of stockholders' equity, which has a column for retained earnings. So we're just kind of doing a subset of the real big statement. Okay, so The next homework exercise, short exercise 1-11. It tells us that Canada Corp began 2014 with retained earnings of 286 million. Again, we're not putting 6 zeros, we're just given 286. That's our beginning retained earnings. Revenues during the year were 482, expenses totaled 337. We had dividends declared of 59. So what's our ending balance of retained earnings? Okay, so we're going to do our statement. So what I've done is I put the problem down at the bottom of the screen, and we're just going to make our statement. So this is back to that handout that I gave. This is now the second box. So you have all the numbers and everything written down. Okay, so on the handout, this is the second box. And we start again when we're doing our proper headings. The first line is the name of the company. The second line is the name of the statement. So this is the statement of retained earnings. And then the third line is the date line. So just like the income statement, the statement of retained earnings covers a period of time. So this is going to be covering for the year ended, and it gives the date. So far, both statements we've done are for a period of time. So the income statement is for the year ended, or quarter ended, or month ended. Same with retained earnings. We're looking at the changes in retained earnings, and we want to know the period of time this covers. Is this the changes in retained earnings for just a month, or for a quarter, or for a year? So it tells us for the year ended. So the dates for the statement of retained earnings and the income statement are the same format. They're for the year ended. Okay, so that's our first part of our statement. Now we're going to do our statement of retained earnings. First of all, first thing we do is we start with our beginning retained earnings balance. But companies don't call it beginning retained earnings. They refer to the last year end. So what they're doing is they're saying our beginning retained earnings in 2014 is what we ended December 31st, 2013 with. Okay? So when you see ending retained earnings from the prior year, that is the same as beginning retained earnings this year. Now to that, we are going to add net income. Typically, companies may not have the word add in there, but we're doing it here so you can see that that's what's going on. We're adding net income. Okay, next line, less dividends declared, because dividends are considered a return of equity to shareholders. Okay, and then finally, we're going to end up with our ending retained earnings, which is retained earnings as of December 31st, 2014. So we start with our beginning retained earnings, which is last year's ending, add net income, subtract dividends declared, and it gives us ending retained earnings. Now we'll start filling in numbers. So when we go, we're going to have 286. That was given to us in the problem. Okay, so the 286, we began the year with 286. And we're putting millions because this statement is in millions. And we're revenues now. Okay, now we start with beginning retained earnings. Our next item is to add income, net income. But nowhere in this problem does it give us net income, so we need to calculate it. Net income is revenues minus expenses. You need to know that. Revenues minus expenses is net income. So revenues during the year in the problem were given as 482. Okay? So in the problem itself, it's telling us revenues were 482. And it's telling us expenses were 337. So we're going to take the 482, subtract the 337, and we get 145. So that's how we're getting net income. So when you do this homework problem, you need to, before you even get to finish the statement, you need to calculate what net income is. So you're taking those revenues minus your expenses, it gives you 145. Okay, next up, dividends declared. Now, notice dividends declared has the minus sign, the brackets, the parentheses around it to say we're subtracting it. It's not like in expenses on the income statement. We don't put minus signs around dividends. I believe we do. Okay, it's convention again. We don't put minus signs around expenses, but on the dividends declared, they're subtracted, so we put minus signs there. And then we take, so we're going to take the 286 plus the 145 minus 59 gives us 372 as our ending retained earnings. Notice again, we have a single underline above the 372, double underline under the 372. You may need to watch for that. When you're doing the homework, there could be 1 or 2 extra lines in there. Make sure that total goes, the ending retained earnings goes on the line with the single underline above and the double underline below. Okay? Because that tells us we're done with the statement. Again, notice that there's a dollar sign in the first number in the column and a dollar sign in the total and not the other ones. Again, my accounting lab doesn't care if you use dollar signs or commas. And I will not test you on where a dollar sign goes. I like to explain, at least give you some idea that it's not just a bunch of typos that I've missed them. Okay, any questions about that? Okay, so now we're going to do another question and try this out. Okay, so this one, it looks just like the question we just had. We're given beginning retained earnings is $100. Revenues for the year total 75, while expenses total 50. Okay, the company paid out dividends during the year totaling 10. Okay, so I'm going to give you this part. It's asking what ending retained earnings is. Okay, so what I've put on the screen is the basic formula. Ending, RE is my abbreviation for retained earnings. So ending retained earnings is going to be equal to your beginning retained earnings plus your net income minus your dividends. Okay, now important here, net income. We calculated it previously. It's fine if you don't remember that. But net income, I'm going to help you here. Net income is your revenues of 75 minus your expenses of 50. Okay, so $25 is your net income. So right now, in your formula here where you're getting beginning retained earnings plus net income minus dividend, your net income is 25. So now you just need to put 2 other numbers in that formula. You need your beginning retained earnings plus 25 minus the dividends is going to get you to the ending retained earnings. Again, learning catalytics does not want dollar signs. Okay. Okay, so I see right now probably 95% or so of you are correct. So for the rest of you, or just play along here, our beginning retained earnings is $100, right? It's giving you, it's telling you that's $100. So we have $100 plus net income. So $100 plus net income, I told you net income is 25. So 100 plus 25. And then you're going to subtract your dividends. And your dividends, it tells during the year, $10. So what you're going to end up with is $100 for your beginning retained earnings plus 25, which we said were, the 75 minus the 50, minus 10. Okay. I'm going to close this in about 10 seconds. I've still got a few people. Do you want to make sure if you take $100 plus 25, that's 125, and you subtract 10, that's going to give you 115. So you want to make sure you have that in there. Okay, so the 115. Good. Okay, now we're on to the third statement. The third statement is the balance sheet. The balance sheet basically reports the accounting equation. It's going to give us our assets, our liabilities, and equity at the end of the year. It's going to tell us that our assets equal our liabilities plus equity. Any balance sheet that's published that you look at, you will be able to take assets equal liabilities plus equity on it. It will work. And it reports retained earnings, which we would have done on the statement of retained earnings. So it comes third in line. We have income statement first, then statement of retained earnings, then the balance sheet. Okay, so what we're going to do here now is we are going to do short exercise 112. Now, this is a balance sheet, and we're going to be putting together a balance sheet. And that handout that I gave, the PDF that I pushed out, this is the third box, and this is the one with the most writing on it. So we're going to walk through this. We're given a lot of details on this exercise. Okay, and we're going to be leaving these numbers because I'm not going to have enough room to do it without these numbers. But before we get there, so it tells us we have cash, receivables, and inventory, and equipment. Those first four numbers that are given are all assets. We can have cash. Receivables are what is due us from other people. Inventory is what we have available for sale. Equipment is what we use. So we have those assets. Accounts payable and long-term notes payable are liabilities, and common stock. Right now, I know because I've done this before, right now their assets don't equal their liabilities plus equity because you're missing one component. You're missing retained earnings. It gives you common stock, but it doesn't give you retained earnings. So we need to solve for retained earnings. So basically what I'm saying here is note that we're not told what equity is. We're not told equity. We're only told common stock. Equity is basically common stock plus retained earnings, or at this point it can be. It gets more, there's more components. But at this point, for this one, when you do this homework problem, you're going to come to this and it's going to have the same issue. So you're not told what total equity is. You're only given common stock. Okay? So we need to solve for equity. We actually have to do two steps. So the first step is to solve for equity. Equity is going to be our assets. To solve for it, we have assets equal liabilities plus equity. So we're going to have to know what total assets are. We're going to have to know what total liabilities are. And then we can get the total of equity. So just follow me step by step how we're going to do this. Okay, so we're solving for equity. That assets equal liabilities plus equity is where we're going. You're going to see this as we go. So the first question we have to ask is, what are total assets? Total assets are going to be our cash. So what we're seeing here we have cash of $21,000, receivables of $17,600, inventory of $79,000, and equipment of $185,000. All those items together are $302,600. Now again, we're not preparing the balance sheet yet, so we're not using the handout yet. We're just trying to solve for this number that we're not given. So total assets are $302,600. So assets equal liabilities plus equity. We now have the asset number. We have $302,600. So we know liabilities plus equity have to be $302,600. Okay, so next step is we ask what are total liabilities. And total liabilities are going to be accounts payable of $25,000 and long-term notes payable of $169,000, both given to us in the problem. So we're going to take our accounts payable plus our long-term notes payable, add them together, and we get total liabilities of $194,000. Okay? Okay, so now we know assets, we know liabilities. So what we're going to see is we're going to see assets 302,600, which is we just added the 4 assets together. We know liabilities are 194,000 because we just added the 2 accounts payable and long-term notes payable together. And now we have to solve for equity. So this is just like the accounting equation problems we started with. So now we can say equity is 108,600. I got that by taking my assets of 302,600, subtracting liabilities of 194,000. So I get total equity of 108,600. Okay, now I'm not done yet because by now we've forgotten what we're doing in the first place. But the problem gave us common stock, did not give us retained earnings. So we are getting closer now. We know that our total equity is common stock plus retained earnings. So now I can substitute in what I know. I know my equity is 108,600. I was just given that. So that's my total equity. I know my common stock is 30,500 because I was given it up here in the problem. So that's where this 30,500 comes from. So I end up with 108,600 equal to 30,500 plus retained earnings. And I'm trying to get to retained earnings. So then I'm going to subtract 30,500 from both sides. And I end up with retained earnings of 78,100. So I just did all these calculations to get down to that one number of 78,100 because we weren't given retained earnings. So that was how we may have to use the accounting equation to get to different numbers. And I admit that's a lot of heavy lifting for a really short problem, but it's a good exercise in terms of the accounting equation. Okay, so now we're going to put those numbers to the side, but we're going to remember the 78,100 because we're going to use it down the road. That's our retained earnings. It was not given in the problem. We need retained earnings. And so when you're doing this homework problem later, you have to go, aha, I remember I have to calculate retained earnings before I even start. Okay, so now we're going to do the balance sheet. Okay, so the balance sheet, and again, this is in the handout, so we're just going to zip through it. The title for the balance sheet, name of the company, name of the statement. The first 2 lines have not changed in the heading. What does change is the date line. A balance sheet is the balance as of that day. It's not for a period of time. The balance sheet is as of one date. And that's important to know as well. A balance sheet is for one date. So when you do this, when you prepare a balance sheet in the homework, if you prepare it on the exam, you have to know, do you pick, when you do a statement, is it for a period ending or is it for a particular date? A balance sheet is a snapshot of what's your balance in cash right now? How much equipment do you have right now? This is not saying how much cash did you have all period. This is saying what was your cash balance on this one day? Okay, so that's why the balance sheet is just one day. So the balance sheet, the first thing we do is we list our assets. Now our assets go in a particular order. Our assets go in order from most liquid, meaning most like cash. How soon are they going to be cash? So current assets are anything that's going to be consumed or turned into cash within 12 months generally. Okay, so we start with current assets. We're going to have cash of 21,000. We're going to have receivables of 17,600, inventory of 79,000. These numbers all came out of the problem itself. Okay, so I'm just didn't do any calculations. Now, those items, cash, receivables, and inventory, are all current assets. So that's something new for us, and they're going to be listed. They're going to be listed in that order. Cash always has to be the first one. Receivables is typically the second one. Inventory takes a little bit longer to sell potentially, so it's usually the third one. Cash is always first. So when you do this homework problem, order does matter. Okay? Cash. Current assets first. Cash, receivables, inventory. Now see a single underline? That says I'm going to do a subtotal here. And I'm going to get my total current assets of 117,600. Then I'm going to add in my long-term assets. In this case, I have equipment, 185,000. So I'm just getting these things. And then I have total assets. And my total assets, no surprise, that was the number we calculated before, 302,600. Okay, now when we're done with assets, we have that single underline, double underline, we're done with assets. So now we know the total of the other side, the total of liabilities plus equity has to be 302,600. But now we're going to go over to the liability side. So we start with liabilities, and we're going to list those from current liabilities to longer liabilities. So the first one is accounts payable, 25,000. Since we only have one, we're not doing a subtotal. Sometimes you can have subtotals with one account, but we're not. So we'll have our current liabilities of 25,000, long-term liabilities 169,000, gives us total liabilities of 94,000. So notice we're getting the 94,000 by taking accounts payable, the current liabilities plus the long-term liabilities. My total liabilities 194,000. Is that your pointer on the screen? I can't seem to move. There, I just did. Okay, next up, stockholders' equity. Now stockholders' equity, common stock, we were given that in the problem. And then retained earnings. Remember retained earnings, that was that number we did all those calculations for, the 78,100. So total stockholders' equity is the common stock of 30,500 plus the 78,100, giving us total stockholders' equity of 108,600. And I get total liabilities and stockholders' equity of 302,600. Now, where I'm getting the 302,600 is I'm taking the total liabilities and adding my total equity here. So I'm taking the 194 and adding the 108,600. And I'm going to draw a single underline above it and double underline, and the 302,600 total liabilities and stockholders' equity will equal my total assets here. Okay, now on a balance sheet, the reason we have current assets and current liabilities separate, those are everything that is going to be, well, current assets are things that are going to be cash or used up within a year. Current liabilities are things that are due within a year. The reason companies do that is because as a user of the financial statements, we want to see, do they have enough resources to pay their bills that are coming due in the short term. So in this company, we look, their current assets are 117,600. They have things coming due in the next year of 25,000. So it looks like they're in good shape from that standpoint. So when you look at a company, one thing you can very quickly look at, do they have the resources to pay their current debts? Okay, so that gets us to the end of the balance sheet, and we're not going to do that question. Okay. I'm not going to do that one. Let's do this one. This is a good one. Okay. What statement is the only statement that is as of one date rather than for a period of time? Are you sure? Try it again. Okay, again, which statement is the only statement that is as of one date rather than a period of time? Big, huge hint. We just did it, right? It was the third statement on that handout. What statement did we just do? Okay. Okay, so not putting up the answer, make sure you get the answer in. But the statement, so you're playing along right here, you're following along. What statement did we just do? Here's the answer for this question. Because right now, 91% of you have this right. So 9% of you need to be listening to me here. What statement did we just finish? Okay, it would be the third statement on the handout for right now. It was the homework problem we just went over. What statement did we just do? I'm going to close this in about 10 seconds. Okay. Which statement is the only statement that is as of one date? Okay. And of course, the answer is balance sheet. Okay, another question here. Which statement reports assets, liabilities, and equity at the end of the year? Okay. Which statement contains assets, liability, and equity? At the end of the year, the end of the quarter? Okay, so on this statement, again, let's talk about what an income statement is. An income statement, that was the first statement we did today. An income statement is revenues minus expenses. Okay, that's what's on an income statement. Income statement is revenues minus expenses. You have gains and losses in there, but that's it. Okay, so on this question, your answer should not be income statement. The statement of retained earnings, that was the second statement we did today. Again, the handout you have, what we just did, the second statement we did today was the statement of retained earnings. And that statement was started with our beginning retained earnings, added our net income, subtracted dividends declared, came up with ending retained earnings. So that's the statement of retained earnings. The balance sheet we just did, that was the third statement. That was the one we just did, so you're following along. That was the last one we did. This answer is not the statement of cash flows. We haven't done that. We won't do that one until later in the semester. The statement of cash flows, you do need to know. It shows where our cash came from and where it went. It's an important statement, but we're not actually doing one now. So I'm going to close this question in about 10 or 15 seconds. But again, to answer this question, you're looking that handout right away. The handout, that PDF, okay, the three we just did, only one of those three statements has assets, liabilities, and equity on it. Those words are actually in the statement somewhere. Only one of those has those words on it. Okay, so if you look at the handout, you can look over those three statements, and only one of them has assets, liabilities, and equity. Okay, so that brings us to the end of what we're doing for this week. I'm going to send out a few videos for some of the other homework problems. Remember, the Help Me Solve This will help you on any of them, but if you want the extra help, I will be sending out those URLs. So remember that the Chapter 1 homework is due this Saturday. You can do it anytime before then. You can do it partly now and wait a day or two and finish it up. You don't have to do it one setting. So have a nice weekend, and I'll see you Monday.